The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Thursday, the 5th of January. We're well into January. I mean, that's the way it is. We're looking at the Dow down 350 at 32,917. Take a moment here to say the rectangle. Well, let me just show you this here. I have different theories and different techniques within the myriad techniques that we have in the Chapman wave method under the umbrella of the Chapman wave. One of them is the long, narrow rectangle. The long, narrow rectangle can last a lot longer than your patience, and every time you think it's going to break out to the upside, it turns around and comes down. Every time you think it's going to break to the downside, it holds the support and starts back up again. If it goes to a D, E, or F, usually a D, above this line at some point, if it comes back after that and cuts halfway into, breaks under halfway of the narrow rectangle, there's a real good chance not only will it test the low, it will break the low. Most importantly, we're looking at the large rectangle. The large rectangle means it just looks exactly like that. It means that you've come off a high, it looks like a little bit of a flagpole, you pull back sharply, and then within that context, that's what you want to be looking at. So the Dow at this particular point, let me move that away, has been stuck in this range for almost 3 weeks. And it says it's going to be in the range until it starts to trade about 32,500. And on the downside, it says holding 32,710. The 200-period moving average support is really key. A break under 32,600 says it's broken down from this level. Now, these bars can keep going for a little while longer. I always look at patterns starting from an identifiable low, and that's defined in the Chapman wave methodology. Identifiable low starts by signal. And then if it goes to a certain level, it can get upgraded to a buy mode. That buy mode says it should go at least to 4 higher peaks, alphabetized A, B, C, D, E, F, and G, higher highs. But it's at that 4th highest peak that other things can happen, can pull back for a tad, and then spike high. But if it closes above, if it has another higher bar after D within 3 bars, that can be an instant restart, and that implies that there could even be another 4 higher peaks. So what have we got? Let's just have a look at this. We got to a D right there around about December the 1st in the Dow, pulls back, and then pops just a little bit above it at 34,712 for an E. And if you measure those, if you look at the vertical ascent, the MACD, stochastic on-balance volume are all not on-balance volume, but all the others were much weaker. Even the 9-period moving average was much lower, even though it was positive at that peak E on the 13th of December. And then it pulled back and it held so far. Every time it's gotten to the 200-period moving average, it's held. So I suspect we're in this range here. I'm liking what I see at this particular point. And let me just go to this to show you what I was looking at. So what do we look at? We look at a trough that with clues on that trough. Candle could be moving averages, could be anything that gives you the buy signal. Usually it's a pattern that we're looking at. So look at that doji candle right there at about 947. Little doji candle, the 1-minute chart. And then what does it do? All the technical start to rally strongly, and it goes to peak A, peak B, peak C. What's the objective of the Chapman wave? Is to get you to at least a D. It went to the D, pull back. The 9 is still over the 14 and a big spike to a leg E. Actually, it's a peak E right now. Where did that peak? I never had a chance to do this because my show was coming up. But very often I look at this and I say, arch formation, cup formation, arch formation, cup formation. Sometimes you can get the exact low with bar symmetry. Other times you've got to say, oh, it's a more and more a measured move based on other things. And if you look at this, the low that was made right there, that's not good. But then I try to identify another candle that could take its place off the low. And it means there's a lopsided cup formation. And what do we have right now? We have right there, measured move from the candle that I chose. And that goes right to, it's probably a little bit early. There it is. There. Oh, to the exact bar. And I didn't take that low there. I chose this particular candle here for a reason, and that took you to the exact. And look at this price time match going from, it missed the D by about 1.5 points in the E-mini, and it missed it in time. And then what happens is if the technicals are still strong, it can rally to a higher level, and that's where it is. So I just want to show you some of the techniques. This is live, so there's nothing here that can be made up. It's just what you see is exactly what you get. All right, so within that context, let me do a couple of things here. Where are we? I suspect, and I've been talking about this for a little while now, that this first week of January is going to give us a lot of clues as to what's working, what had been working and is continuing to work, what did work and is now failing to work, and what has been just a monstrous mess over the last year and a half, especially the last year, and that could, in fact, start to work to the upside. Within that context, we're starting to choose stocks and positions. Yes, we have ETFs, etc., but we are looking at positions that are, how can I put it, that were the undarlings of the last, at least the last 6 to 8 months, and that could, in fact, start to find some support, and I think that that's going to be really important. Okay, got that out the way. Let's just do this quickly. So the Dow, on the day, I'd like it to close well off the low. It can close negative because we're in the rectangle formation, but if we do go to the low by Monday, is Monday a holiday? I can't remember now. By the first trading day of next week, I want to see us going right back towards the 33,300s, and that'll be really important. And that'll say we are forming some kind of a base that could, in fact, start to see a decent rally. Okay, S&P lagging in chart formation. Where did I type that? Probably on the chart. Here we go. Try it again. Dollar SPX.X. There it is. So same thing here. There's a cluster formation. This cluster formation should, I'm only saying should resolve by Wednesday, or when it be Thursday, by next Wednesday to next Thursday, by trading above 38.80, maybe even 38.90. That to me would be a really good resolution to this big digestive phase that's gone on for a few weeks since the 13th of December high. And that was fantastic. 4,100.51 at peak D in the S&P on the 1st of December. 13th of December, after pulling back quite sharply to the 39.30s, it goes all the way back and goes to 4,100.96. I mean, that is 47 cents away from making a new recovery high. I mean, it's 45 cents above the previous high, and that's amazing. It's just, what did I say? I said 45 cents off that, above that previous high. And then look at this. And the technicals was so weak at this particular point. The Dow technicals, the MACD and stochastic and all that were weak, but not the on-balance volume. Here, the on-balance volume was weak, and now we're getting a little V-shaped formation. I suspect that we are starting to try to build some kind of a base here from which to at least have a bounce forward to test the Chapman inside track repellent zone in the 4,000 level in January in the S&P. I'll be back. Basil Chapman, Dow's down to 53.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hello, so we're looking at the euro. This is the EUO, which is the Daily Arca ProShares Ultra Short Euro. I had a question about that. Now, I would normally not put an up arrow for a tiny little move like this, thinking that a buy signal is going to go to a buy mode and then go to a D. Well, it has gone to the D in the shortest time frame. So normally I would put a plus sign there and then I would upgrade it. Well, I could only upgrade it today because it's already got to the D. But I've never really, never seen this. One of the few, there are not that many instruments that I haven't at least seen, if not done all my technical homework on. Let's see. So that's B, that's a C, and that made a peak D. So this is the EUO trading at 30.45, up 45 cents, up actually 1.50. And for anything to do with currency, yeah, I realize it's an aggressively short because it's got its ProShares, and therefore I've got to look at it a little bit differently. But let me show you something else. The EU, where can I type that? The EUR, and there's your peak D in the monthly chart, and the EUR itself, EUR USD. So this I have done work on. You can see this, the vertical lines, and I discussed this, I think I discussed this last week. But anyway, I gave a left side, right side price symmetry for this, and I went to the let me go right here, from the cluster formation highs that were made back in around about June of 2022, all the way down, but I did not choose the low bar because that just looked like it would take too much time. So I chose the high bar of the this is going to go to the, to the 12th of September of 2022 at 1.01978. Now remember, this is a continuous contract, so it gets smoothed out. So that price, the number will change. Nothing else, not the notation, nothing. So what it did is it went to this peak D. That was the 1st of December, was it? No, that was the one that was on the 15th of December. 15th of December at a peak D. Look, the MACD is good. Stochastic was excellent, above 80%. On relative strength right there was good. There's no volume on this because you have to trade the futures themselves. This is a continuous contract. So it walked the 9-period moving average, held it beautifully, which is way above the 14, and then it popped up to this peak E, leg E, and then a peak E, and that was on the 2nd of January of 2023. 2nd of January, that was during that was while we were on holiday. And the technicals were way weaker. So now it's pulling back. But I'm saying to you, 1.04 is the 200-period moving average. That's at 1.0539 right now. That would be what I would be looking at in terms of an arch formation. That's also like a rectangle formation. And it says round about that area, in the 1.04 area, is where there should be some support. And if you put it together with the USD JPY, which is the yen, you can see that this did a left side, right side price time match a little bit early, but it went to it just took out the left side low of the 2nd of August, which is at 130.412, went all the way up to 2 buy modes, a second peak D right there, and that was in October the 21st at 151.945, and now it's come back. And look at this. This is Chapman wave inside wedge, a target support zone. It kept on a line. It kept on taking it out and then popping back up and then taking it out, popping back up. Finally, it took it out and it made a low on the 3rd of January at 129.518. And now it's running a little bit. So this 134.84 200-period exponential moving average is going to be strong resistance. But the MACD has started to improve a little bit. It's not great, but it's improving. Stochastics has gone from under 20% to over 20% to 2137. That's good. The 9-period moving average is still very weak. For the 9 to cross positive, the 914 crossover would say that it needs to get, probably you'd have to see a little bit above 134. What did I say? It was 84, which is the 200-period moving average. Probably touch 135 to really see that cross positive. And if it does that, then we can see higher prices. In the meantime, I'm treating this as an important bounce. And certainly in gold, let me do both gold and silver right now. In gold, you've gotten to a peak F/C. The on-balance volumes turned down. The stochastic went above 80%. Now it's under 80% at 79.31. The MACD is okay, and the 9 is still above the 14. And I'm just saying, it looks to me like gold can have a consolidation. It doesn't have to break down, but a consolidation. I had really seriously thought of the DZZ, which is the ARCA DB Gold double short, buying it for, getting it for subscribers. I don't really want to touch the short side of gold. I think gold so far is acting really well. I don't want to be biased by saying, oh, now I'm not only short, but I'm double short. When in fact, it's been holding so well. It's gotten above, gold went above the 200-period moving average very nicely. That makes all the moving averages key support. Looking at the GDX, it's a little different chart. It's gone above the 200-period moving average forever. I mean, just for since November, and it hasn't been able to hold above it. It keeps coming back, going under it, and then going back above it. And it's at 30.15, down 77 cents. At a leg D, probably a peak D today. And the technicals are not as strong as silver. Look at this, silver. Come on, hello, anybody home? There it is. So silver has gone to a peak F right here. But look how high it is above the 200-period moving average, and it only briefly used it as a springboard. So silver remains stronger than the down. What I had said yesterday was that when I see gold finally catching up to silver, which is leading, that's invariably where they both take a little bit of a tumble. It doesn't have to be a major sell, but a little bit of a tumble. And I'll be watching it, because then what happens is they kind of restart. Then gold sort of holds a little bit better. Silver takes a bit of a deeper dive. I'm watching this because so far the silver chart, and I've been talking about this for some time, is really much, much stronger. Just we're looking at these big charts. Let me just open this out. This is the daily silver. Look at this high-grade copper. High-grade copper is just stuck in the rectangle. Rectangle formation can last a lot longer than your patience. In fact, sometimes it's even better. Just I stepped aside today. We did no trading in terms of the Dow or anything else. I said that I am looking at the QQQ. I believe the Qs are trying to find some kind of a base. No trade right now, but we do. A question came in, Basil, what about that screamer you were talking about yesterday? I don't want to mention the name. Unless it's asked, unless I'm specifically asked, I'm not going to mention the name. Yes, we took something that has just been, I can't say hammered or beaten down over the last year. I would just say decimated is the word. And it went into the ones. And yes, we bought it at a fantastic gain. And we were down yesterday. So I'd sent my newsletter, which would have been out at about 8:15. Only got out at, 2 o'clock or something like that. And I said there was nothing to do. Everything that we wanted to buy, the Dow on a dip, not anything other than the DIA, just for a trade and raising the stop. We didn't get it because it did give us our entry point, but it wasn't official because I hadn't the newsletter never went out. And on this particular instance, I'm just stepping aside. A rectangle formation can last a lot longer than your patience and cost you a lot of money when you think it's going to break down. Sometimes it's better just to wait. I'll be waiting, and I'm waiting for the Dow down 350.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hello, it's Basil Chapman here. Dow is down 297, S&P's down 35, and I wanted to show you, so questions came in. So look at crude oil, also daily chart. It's a very busy looking chart, but I like to notate as it is. And you see all these letters here, they move around because it's a continuous contract. When it gets smoothed out at whenever it is, at the first end of the month, I never remember until I see it. All the letters, I have to move them around. But it's the arch formation. One arch formation, second arch formation. And if you look at Exxon, I've been talking about this for such a long time now. For a couple of months, I've been saying, I see Exxon is starting to top out in terms of the upside. I don't see it topping out in terms of the some kind of huge collapse. I just see that if you had it, take a little money off, treat it as a dividend stock. At the same time, I'm looking at another area, another sector that can give you dividends. My question in that particular area is there's so much competition in that area, and it's a kind of complex area that the price of whatever you want to buy in that sector, you have to look at the individual stocks, or you get the whole sector as a generic thing and it'll move slower. But in this particular instance, the dividends and the capital gain in the multinational oils, or any of the oils actually, has been spectacular. Now I think there's just this big digestive phase. It made a quick peak, ABCD, in the daily chart. It's still, the green is still above the black 14-period moving average, and that's good. But there should be further consolidation going sideways, like a rectangle formation. A question came in. Well, it wasn't a question. I saw someone mention APA. I haven't got APA notated. I used to have it, but for some reason I lost that. I can do it very quickly. Just going from the lowest low. Remember, the most identifiable low is easy to do when you're looking historically, because you're not looking at guessing what's coming up. You're looking at what's been. And that's what economists should do. Remember, the Fed can only look at backward data. That's their charter. And that means that they're all, it's like the MACD. The MACD's, because of its makeup, not the stochastic, look at the slow stochastic, gave you an exact turnaround on the low that was made on the 6th of July in APA, which is APA core. Wasn't that Apache core? Whatever. Anyway, I believe it's an oil stock. And so APA is trading on the 6th of July 2022 at a low of 30.69. Stochastic makes a W bottom exactly on that day. And the MACD a little later only does a turnaround on that arch formation that took out that left side low, went to a lower low on the 14th. And that's why you can't use any one indicator. You have to have an amalgam. You have to be looking at certain things that are consistent. And then sometimes when it's not, you have to have alternates. But look at this. When it started, the really big rally, and that big rally started from the 5th of August at 30.15, not much lower than either the 14th of July of 30.44 or the 30.69 low of the 6th of July. I love these cluster formations because what it does is, and it makes this H that goes to, let me just draw this in for you. You see this pattern here? So you've got yourself a trend line, and then you've got yourself another trend line, so it becomes a little mini channel. I call that Chapman inside track propellant zone. And finally, when it takes off, you've got the MACD already very much higher, stochastic way higher than it was back at the July low. Look at that. And you've got all the signals that say, great, if it turns positive again and goes above any key resistance, in this case, the 200-period moving average, it can go a lot higher. What it did, then it came back, couldn't resist that 200-period moving average. You even had an island reversal right there. Look at this island reversal, which one day could be filled, but it hasn't been filled yet. So APA, I think this is a much weaker chart than Exxon. I don't think so. I think that the 40.01 is the 200-period moving average. I suspect it's going to visit that again. I think it's making lower lows and lower highs. It's a little different pattern. Question came in about Amazon yesterday, and what's Amazon doing today? It's giving back some. It's at 83.70. Let me just make this a little smaller. So that sorry. Let me just move it over to the left. Yes, so it's really important that Amazon takes this decline from the Chapman Wave Roman candle of yesterday, almost testing the left side low. The low today is 83.64, and it's at 83.73 right now. You see the way the stochastic is moving nicely. I don't like the on-balance volume being so low and not rallying. That's just not a good sign. But the MACD is good. The 9-period moving average, you see the histogram right there. That's the vertical lines. That's the 0% line. That's the distance between the 9-period differential green in the MACD and the red slow moving average, the 26-period moving average. So that's moving up. And it won't take much for Amazon to, at least if it can hold 83.10, 82.90 between now and Friday, it's going to be tough to do. But by Tuesday, Wednesday, Thursday of next week, it's attempting to move over the 95.80 level, right there, 95.80. I'm going to make it a little higher. I'm going to say 96.10. You can go above 86.10. I meant 86.10. Someone must have said, wow, 90. No, 86.10. Then that 9-period moving average is going to finally turn green. And that's what you want to see. And that's only good for, I'm treating this as a bounce in Amazon, because if it takes out the low of the 28th of December of 81.60, if it closes under 81.69, there's a lot more work to be done. I still think there's a lot more work to be done looking out, but you could have, if it has a rally in the next, by Friday, tomorrow week, if it's running and it's getting into the 89s instead of the 79s, it's up in the 89s, that's going to say to you that there could be a bounce and it could be raising the base of support. That's all I'm looking at. So another question came in. Let me see, where did it go? FXI is the, this is the big caps, the large cap China ETF. It's called, let me just get that, refresh. There we go. So trading down 21 cents at 30.98. Yeah, this is I'm calling this a peak C for now, and I think it's going to try to go for a D. It's a leg C in the weekly chart. Considering all the bad news coming off the low that was made, that was the low of late November, was it? Wait a minute. Late October, the 31st, early November, at 20.87. We are now at 30.97. I would say that that's 50% gain. That is a fantastic gain. But if you're looking at the monthly chart, there's a lot of work to be done. The weekly chart is a nice V-shaped pattern. And this is saying to me that regardless of the dollar, I think that it's saying to us that if China's starting to get back on track, and it could certainly be getting back on track, I think that's going to help our market. I must say, listening to the news over the last week, it really has been so depressing. But when I'm looking at the charts, I think this rotational aspect is so important, the corrections that are rotational. It's very, very important. And because of that, within the context of trying to identify sectors and stocks, I think this is a perfect time for that. And I mean, let's just look at this. Nuant mining, I'm talking about rotation. And look, goes right to the 200-period moving average. It's at 50.10. It's down $1.40 yesterday, almost in 52. But look at the weekly chart, the way it's starting to improve. But when you get to something like GOLD, you can see that it's just pushed sharply away from the 200-period moving average. That's Barrick Gold, and yet the monthly chart is still very weak. So I'm suggesting to you that you've got to be very specific in your identification of what you think is working, because you could be ignoring the market by being in the right sectors. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for Dave's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. So the question came in ALB for entry, please. Satish and the Dan wants to know. So ALB is this whole area, Albemarle Core, chemical for electronics, lithium, petroleum refining, utilities, packaging, construction, transportation, pharma, crop production, food safety. I mean, doesn't that sound fantastic? And yet it's gone from a high in the just under 340 to a low just the other day of 208. And it's trading right now 223. This to me is a very difficult buy. There needs to be a story attached to it and a new story. There was an old story, but now there needs to be a new story. So if you're asking for a buy that says, I'm just guessing, but from the way you've asked the question, I'm suggesting to you that if you are looking at this as a core position that you want to start a position in that has really great upside potential, I'm saying yes, but not now. I just don't see it at this point. I don't have any indication other than to say as a trade at 223. I don't want to have a 15-point stop in here. I want to at 223. I don't want more than a 3.5 to a 4-point stop. Why? Even though it's just like a 2% risk, because the way that it's come down has been so intense that unless you get a V-shaped pattern that says that yesterday was okay, today it can't be down 8 cents. It has to be up about 5. I'd say 3. It should be up at least 3.5 to maybe 4.5 points. And I'd say that is fabulous. That's exactly the kind of turnaround you want to see. Not this little flimsy stuff. It could still happen, but it hasn't. So I'm just suggesting to you that if you're interested in it, maybe just nibble. And when I say nibble, I just mean like get your foot into the door if you're able to just buy a tiny little, a small amount, just a small amount, and give it time, because it's just too early for me to say, oh, at 223, it's going to 238, maybe even 249, the 200-period moving average. It's taken a few weeks to get down here, and it hasn't in 2 or 3 days taken out 6 or 7 bars on the left. It's still struggling. I would just suggest that Albemarle it should be in the right area, but that monthly and weekly chart just said, wrong thinking, and it went up on the wrong thinking. And therefore, it's come down and has broken key support levels. So all I'm saying is that if you are interested in it, you and I aren't able to tell the potential for the upside. At least I can't until I see it in sync with the technicals, which are improving, and the price has to be better than it is right now, up 11 cents at this point. Someone's listening to us. So just, you want to nibble, I would say, give me a week with this stock, and I'm going to be able to tell you a lot more, because it's got so much to go to the 240 level, which is 249, which is the 200-period moving average. even if it was at 234 right now, I'd say there's still that resistance in the bar of the 21st of 237. So a nibble here with if you nibble, I don't mind saying to you have a 4-point stop. And let's look at it again. I'm going to put it down here. We'll look at it again maybe Tuesday of next week. ALB at 223. I'll just call it 223. Look again Tuesday next week. All right, I hope that helps you. The next thing I had a question about was natural gas. So you remember yesterday I said, I'm not sure about this pattern. It's extended a little bit. I wouldn't even, it was the UNG that the real question was, because that's the trading vehicle. They were doing futures. And I said, this is a doji candle, and today's at that point, it wasn't acting all that well. It closed a little bit better. It went into the gap. But I said, I don't see it. The technicals are still very weak. So all I can say is I'd have to wait, because it's got this left side, right side price time match in the weekly chart. That's the UNG, which had a low of 11.69 the week of December the 27th, a year ago. It was there, and then it screams up to the 34s, and it comes tumbling down. I want to see this whole area. Look how long it went, 1, 2, 3, 4. It was 4 weeks that it just hung around this 12-ish area, 12, 13 area, and then it just took off. So let's see if it hangs around here after gapping down. Maybe it forms the same thing, but it's got a left side, right side price time match, which says this is exactly the week that it should form some kind of a base in the 11s. So I don't want to say anything just yet. It's gapped down. It's down $1.21. It's down 9%. I mean, and yesterday I joked because someone said this is the widow maker, because people just have a heart attack when they're looking at it. Here it is at 12.02. I would rather be buying higher highs and higher lows. Let it establish a base. This is one time I don't mind missing the exact low, because if you're wrong, it's a falling knife and it just keeps coming down. And right here is exactly the moment that it should try to form some kind of a base. It's within, I'd say, 58 to 80 cents of that level. And if it doesn't, it can go right through. And this is the year. Maybe it's a great winter over in Europe. I don't know. Anyway, so that's UNG. The next question was, where did it go? Oh, XLE. XLE, you just do an analysis? Yes. So analysis is the same as the crude oil, the USO. They don't go together exactly, but they've been doing pretty much the same. Look, USO has already turned down from the 92.20 United States Oil Fund high of June of this year. It's making the dreaded H pattern. It's gone to a lower low. That should be a C, not a G, right there in the monthly chart. And look at the what was it? XLE. XLE is this is the S&P Select Energy Spider Fund. That made a high in the monthly chart. It took a little while. It was November. November went to 94.71. And here it is trading at, not a big deal, 85.23. But there's your dreaded H pattern. And if the XLE closes under 81.50, watch out, 79.54 is the 200-period moving average. That's what I think it's going to visit. So far, it's just in a rectangle formation. The lowercase h has gone to a lowercase m. And that's all that's happened here. And basically, it's think of it as a rectangle formation in the lower range. All right, next thing I had a question of was, where did we go? Yes. I'll follow up so tomorrow I'll talk a little bit about, for my subscribers to my opening call, when I say take a tad off, what does that mean? What do I say start a small? I'm going to talk about some of the verbiage that I use. And for a couple of people, new subscribers who just said, can you just elucidate a little bit more? We've got the idea, but we aren't quite sure. That's number one. Number two is I always think of my newsletter as, there are people that only use the newsletter for their trading. There are people and some fund managers who like the big picture that I always give, and they've used it not just for years, but for the 20 years that I've been at TFNN. That's just kind of what they like. It's always a mix. I mean, I have someone who maybe will go off to work and not do anything. They get my newsletter and they have to work out a trade from that, which comes out usually between 8 and 8:30. and then they have to figure out what to do while they're away, and then they come back and they have to put stops in and all sorts of things like that. And I have other people who are available, 24 hours a day. This is kind of what they do. I'll be right back. So, I'll talk a little bit about that tomorrow.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selected stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, downtown 370. Remember, rectangle formation can last a lot longer than your patience. That's where we're stuck here in a trading band. So I just want to quickly show you the wheat is down 6.5 at 739. It made that peak D, and it did it with the 382 retracement, and then fell right at the peak D and right at the Chapman Wave inside track repellent zone. So I love these particular techniques. They confirm other techniques that people use. Let me just see. Did I do soybeans? Soybean went to a peak E, and look at the sharp pullback. Look at corn, as we say right here. This only went to a peak C and then failed, and it's coming all the way back. So the grains are starting to pull back. When you talk about deflation, I'm impressed at the way some of these commodities have started to pull back. I don't think this is the end of deflation. I'm just saying that there are areas that are alleviating some of the stress, and we're seeing that. Look at crude oil. Crude oil's been pulling back. These things are really important. So we're getting to a point where all of a sudden there's going to be suddenly the sun comes out after all this dark news cloud cover, And that could be a real nice springboard for at least a rally attempt. That's what I'm thinking. But I say, be careful. Let it start. Don't anticipate it. You want to be buying strength. You don't want to be buying weakness. So with that said, we're going to hand you over to Steve Rhodes. Don't forget, great programming here. Starting off with Steve coming up. And we go all the way through. Tom O'Brien finishes up. Tommy O'Brien starts us off at 9 with an absolutely fabulous show. And also he has guests that he has. He has good interviews because he asks great questions. And, of course, he also does options. So Tommy Jr., check him out at 9 o'clock in the morning. So with that, I'm going to hand you over to Steve Rhodes. Am I actually beating the gong for a change? Well, how about that? Let's look at sugar. We'll go to sugar. Sugar is trading after the peak F top. It's pulling back. So all the commodities are some of them at higher levels, but they're starting to consolidate. I think that's a good sign. But we also look tomorrow, we'll look at the IYT, which is a transport. I need a transportation index to be much higher. Have a wonderful rest of the day. Check out my opening call, and we will see you tomorrow. Stay tuned for great programming.